Good afternoon, everybody. Welcome to Purelite Ventures Presents. Today, we are going to be talking about the future of health, Gen Z and VC. And we are so excited to welcome Natalie Neptune, the founder of GenZ, to Purelite Ventures Presents. So, Natalie, I would love you to tell us a little bit about yourself and how you came to be the founder of GenZ.
Yeah, so it really started, of course, due to a layoff, of course. So I moved to New York last year after I graduated in 2024. I was working in an ad tech startup. And of course, after a couple months, just due to their focus on pre-sales instead of post-sales, I was unfortunately laid off, and I decided to invest in myself. And as you know, the future is IRL. And so I decided to start a company, a LLC, focusing on pretty much hosting IRL events for founders, creators, investors. Because as you know, attending a lot of tech events aren't very diverse in regards to, different gender-wise, and all those different ratios. So my goal was really to create events for the next generation, since there's so many cool entrepreneurs, popping out that are Gen Z, but there is not a solid one community for them to be able to really connect with each other, and also be leading a panel, discussion, as you guys all are going to a lot of different tech events, but a lot of times on the panel, you don't see a Gen Z person represented. So really GenZ was created to have Gen Z just not in the room, but at the table.
That's fantastic. And I like the way you pivoted. You saw an opportunity and you went for it. Considering that during the time that you were in college, probably that's when COVID struck, and there was a downturn, of course, in real life events. So how have you seen that GenZ has helped to fix that issue?
Yeah, so pretty much we've been solving that epidemic of loneliness. And as you can see, there's been a lot of reports about Gen Z suffering from mental health issues and all this stuff. So really Gen Z has stepped in there to host events, for the next generation, really empowering them, not just attending events, but a lot of, for example, events that we host. Since we host event at Peace University, it was a personal branding 101 for founders. As you see, a lot of Gen Zs are taking those charge of being creator entrepreneurs. And then the panel was mainly 30 plus. So we do focus on those intergenerational events. So everyone can get together, because, in the future work economy, this is the first time we've had 5 generations in the workforce. So of course, a big component is making sure, having Gen Z in the rooms represented, but also having different generations be able to combine and share perspectives, because that's really how the future, of work and just our collaboration and how we're be able to grow together as an economy, just not in the US, but globally, is through that shared connection and getting to understand each other.
It's interesting. It makes me think of the African saying, it takes a village to raise a child, right? But it also takes a village to build a company, because there's one of these things that many adults have is wisdom, because they've been through so many ups and downs and they've seen so many things happen. But then with the young generation, I won't say that they don't have that, but they have less experience. But many people in the younger generation, they have vision and they have ideas and they have that spark and that energy. So I think combining those 5 generations is going to be a game changer and something that we've kind of lost in the United States in some way, shape, or form, because we tend to worship youth, but we need both the youth and we need the more mature people to come together. They're both very important.
Yes, I agree with that.
Mm-hmm. So just quickly, can you talk about your favorite event so far, or one of your favorite events? I'm sure you have a lot that are noteworthy.
Yeah, there's a lot, but I'd like to say our most notable is the monthly Gen Z founder creator mixers that I host. And I kind of kicked this off starting last year. That's when I started hosting my own events by myself. Those were the first bigger events that I hosted. Started kind of at a indoor rooftop, outdoor rooftop. Now we scaled up to being at a corporate company. So Kiehl's under L'Oreal, we host events at their location, and we were featured in Business Insider. We had NBC News even filming during New York Tech Week. So, and recently just had CNBC too also cover Gen Z T. So that's been the highlight event, and we've had all the top startups from Series, who you may have heard, raised $3.1 million, the largest ever of any Ivy League student, to Yale students. They recently sponsored events and they feature events regularly in their viral videos too.
Oh, that's fantastic. It really shows that Gen Z is gaining. And just so that people understand what Gen Z actually means, can you give us a definition of that so that our viewers can understand the age group that we're talking about?
Yeah, so Gen Z, I like to say I usually keep it from the 13 to 28 range for Generation Z, which is way bigger than, of course, like Gen Alpha, but that's typically the age range of Generation Z. So it's a pretty big range. So it's people that still have buying power, buying capabilities. As we're heading up to that age of almost even 30 years old. So I like to say there's a lot of even buying power within Gen Z as like a consumer too.
Yeah, I find that really interesting, especially for those who are approaching 30, because we do have all of these financial tools that are available to Gen Z, and some of them are very, very potent. Like I would say, like a 401k is a very good thing to have, but a 401k doesn't necessarily build generational wealth, right? It is structured so that you will work until you're 65, and then have enough money to retire. Whereas venture capital is structured in a different way, where there is some risk, but then there are higher returns. So the ability to retire much earlier is, you know, is a present and exciting idea and possibility for a lot of people. So you got into venture capital, and I'm curious if that's one of the reasons you got into venture capital, or if you had other reasons.
Yeah, so it really started back in college. I actually started college thinking I wanted to become a doctor. Like that was pretty much my goal. I was a civil engineering major and I did pre-med courses too. And I learned about the startup world back in 2021 when COVID shut down and universities kicked people out of schools. When I was back at home, I worked for some UC Berkeley startups, and that's how I learned about entrepreneurship. And it wasn't until 2022 I learned about the term venture capital, and I was immediately knew I wanted to become then an investor. So I volunteered for the top of the one who coined the term Gen Z VC, Megan Loyce, and I volunteered for her as a community manager. And from that opportunity, I was able to break into venture capital through HBCU VC, which is a fellowship program. And I became an analyst for 7Y Ventures, which is a digital health firm located in Chicago. Yes. And that was kind of like my background of learning about venture capital. And when I decided I wanted to be an analyst, now, of course, you can see I'm more on the platform side of venture capital. So connecting founders and creators, investors together, IRL.
Fantastic. And I have to send a shout out to Chicago, although I don't live there, very close to my heart.
Mm-hmm.
So really great town. So now that we've gotten a background about you and we know more about what drives you,
Mm-hmm.
I would love to dive into a few questions.
Yeah.
Now, what kind of startups and industries do you find most attractive to Generation Z investors?
Yeah, so like going into actually, I created a slide deck for all of you, which is talking about redefining investment in health and beyond. And pretty much, this is just a visual component to what I'll be talking to because I love to throw out numbers so you can really get a gist of the impact that Gen Z is really having on the market. So as you can see, like, of course, the numbers really just paint the picture as, digital health is reaching, pretty much in the billions by 2025. And a lot of Gen Z are actually driving the adoption of telehealth. But like what we see what's really unique about Gen Z and investing, we don't see health just as a separate vertical, but it's really as a foundation of everything that we do. So, mental health tech is really important as companies like Modern Health are really transforming the workplace mental wellness, with like 75% of engaged members reporting improved well-being. There's other pretty much companies like Spring Health that's working with major employees like LinkedIn, this platform, because, we really demand companies prioritize employee mental wellness, which you may see if you are a 9-to-5 worker. You may see that added in as even a benefit to your health benefits, of course, like if you are in a company that offers that stuff. And then going into even the creator economy, as you can see.
Can I ask you a quick question though? So you mentioned digital and mental health.
Yeah.
And in my generation, I think I'm Generation X. I believe I'm Generation X. There wasn't a lot of talk about mental health in the same way that there is now. And I don't think there was the same amount of education surrounding it. So I feel like the push that the Gen Zers have been moving into mental health and digital health is not only helping them, not only helping you as a Gen Zer, but it's helping people who are senior citizens, seniors. It's helping people of my generation. It's just helping everybody in general.
Yeah.
So I'm super excited about digital and mental health because especially for people who don't have mobility to, digital and mental health that's online or on an app is so important.
Yep. Yeah, like even one company you probably have heard of a lot of is Superpower. They have been really active in the health space, and it's been usually very expensive to have. Back in the days, usually doctors came to your home and actually cared for you individually, and now that's like a huge expense. Usually, the upper middle class or the very high class, usually individuals have access to. But you're seeing that democratization of health becoming at home care. This is something we actually even evaluate in several Wire Ventures, and they have a report about this at home care. And you're seeing Superpower is a great user of that, such as your busy entrepreneur or founder, even 9-to-5 worker, as you have very late hours sometimes, is having your blood tests actually be taken at home. Actually, care professional actually comes and takes your blood and all that stuff. Things that you would normally have to go to facility to do, it's actually becoming at home care back again. So it's like we're kind of going back to like the old days, and now it's actually way more affordable where you can buy a subscription that isn't too expensive. It of course is not including insurance. That's just like one example of that, the digital and industry that is really attracting, Gen Z investors.
Fantastic.
Yeah. But yeah, like going into the fintech and Web3, as you know, with our new administration, there's been a huge push on the Web3 and digital assets, as they aren't just trends, and they really tell us about health data. And we're seeing that shift, how our whole economy and money values shift will be even eventually will be on like the blockchain system. So like you're really seeing a lot of different companies focus on that. So like overall, we're just not investing in like products. We're really investing in, I like to say, movements, and the startups that get our attention solve problems we're personally experiences, such as me, is like with student healthcare, center inadequacies, therapy wait lists, insurance confusion, environmental anxiety, and like reproductive healthcare barriers. So that really goes into that like first question, like you asked, what's really attracting Gen Z.
Mm-hmm. Fantastic. Thank you.
And
Please continue.
oh, that was it for your question.
Okay. So then also, which factors are most important to Gen Z when evaluating a potential investment? Oftentimes, there are the tried and true ways of vetting and doing due diligence when it comes to investing in startups. But Gen Z, as a new generation that is now coming into its own, you will have your own criteria, and I'd love to hear more about how you see it.
Yeah, so I do have a deck for this, but as like, Gen Z, we, traditional VC evaluation really looks at, market size, competitive landscape, financial projections, and we look at all of that, but we also like add on layers that previous generations didn't look as much. And like stats that like really matter to us is like 83% of Gen Z considers company values when making investment decisions. And, we all know with companies with diverse founding teams actually produce higher returns and even health. As you know, representation directly affects outcomes. So we really have like 4 like even different pillars that really we focus on. Is of course number 1 is like personal relevance, and like does this solve like a problem that I'm like currently facing? As you know, 43% of Gen Z has delayed medical health care due to cost. So we immediately understand companies building transparent pricing and direct pay models is really important. Great example is like RO, they raised like pretty much like $1 billion for telehealth services, and that really bypasses the traditional healthcare gatekeepers. Of course, we're going into the fintech. Robinhood, who I actually know some of the Robinhood team, they really helped to democratize investing through that commission-free trading, because with our generation has lived through the student debt, and something I'm even personally experienced. So we really get why financial wellness platforms really matter. And 2 is of course that cultural competency assessment. Like, does this team understand our relationship with wellness, mental health, and body positivity? For example, like Little Otter's example, they raised funding for child mental health cares. They understand that kids need specialized, accessible care. We really reject like companies that perpetuate the diet culture. I think that was really back in the 90s, 80s, or treat mental health as separate from physical health. I know I'm blanking on the names, but I know there was a lot of popular diet culture, even treatments that have actually gone kind of out of the business. You don't really hear them anymore. So that's just an example, I think, of the power of like Gen Z's, of course, like adapting. And then going back to the fourth, the last component is like we evaluate like exit potential through companies Gen Z actually uses, such as, we're excited about acquisition possibilities with, Apple Health, Google Wellness, and all different things. But I like to say overall, we believe in data privacy is non-negotiable, personal data, and especially health information. So, we're really evaluating companies' data governance from day one. That's why that I touched about earlier, the Web3 and the blockchain health applications really allow
Sure.
us to own our own data. And basically, overall, like what's different, we evaluate companies, even I say like TikTok strategies, as seriously as their go-to-market strategy. There's even a very notable investor, Jenny something, I forget her name. Probably people know who she is, but she just even made a recent post about how investors now when you bring up your go-to-market deck, if it's very like, oh, we're doing this, like things that are very traditional marketing, investors aren't going to take you seriously, because the new form of marketing is completely different in terms of how people are yeah, it's pretty much like completely different, the go-to-market strategy. Like for some people it may be building a wait list, before, or building a community, or being, as I said, creator entrepreneur. So it isn't really a set structure for go-to-market strategy. It's really like throwing things and figuring out like what sticks now. So it's like way different. So going back to founder, having the founder being very authentic is huge for us, because we want to be able to, of course, grab company with founders, not just review their pitch decks. And you're seeing a focus transitioning from venture capital isn't necessarily needed to fund a business anymore. So and founders are really looking for investors that aren't just going to throw them money, but actually mentor them and actually help them actually grow their company. So that's where you're seeing like a shift.
Fantastic. It's interesting because some of the concerns that you were talking about were things that were very important, but because we hadn't had the experience, we didn't know that they were important. So that whole thing with data sensitivity. A lot of companies, a lot of startups were using that as a method of making profit, right? So they would sell all the information. We didn't know that at a certain point. Like a lot of people didn't know that as a world community. And so a lot of privacy was breached based on that. And so it's really interesting that Gen Z has a really good pulse on the things that have happened in the past, not necessarily to them, but the things that could happen. So it's backward glance, but it's also a forward glance. And I really like that. It's a strong way to look at things. So that being said, in what ways do you feel that venture capital firms are adapting their pitches to appeal to Generation Z investors?
Yeah, so I realized I kind of went through these metrics, but yeah, how we're adapting to Gen Z, like VC firms are just realizing that pretty much pitching to Gen Z requires like a complete different communication overhaul. Like as shown on the slide, like our attention span is very limited. It's only 8 seconds compared to like the 12 seconds for millennials. So we really consume health information, just information in general, completely different than previous generations. As I bet a lot of you have interacted with Gen Z, and there was something just went viral recently. I haven't posted about it yet, but it's like the Gen Z stare. Like we just
I've seen it.
yes, like I've actually experienced that because I'm 25. I'm on the, I guess, older side of Gen Z, but I have like experienced that with younger generations when talking to some people. So like it just goes to like you have to be very efficient with what you're like saying. And
you know
like
what, Natalie?
yeah.
I think it's very funny because when I was growing up, we did have that, but most parents wouldn't let you get away with it. Like just like you would not get away with giving your parents a blank stare instead of an answer. Whereas things have changed. Things have changed. So, but I laughed so hard when I saw that because I have experienced it.
Yeah, I bet a lot of other people in the audience probably have experienced that too. But yeah, like as I said, like pitch decks can be a lot different. I like to say it really depends on the firm and the sector. You could have like meme slides alongside traditional financials, seeing even like Spring Health included like TikTok engagement metrics next to their clinical outcome data. So it really like depends on like who like you're selling to. Like some businesses are more B2B, some are more B2C, and some are of course B2B to C. But yeah, like as I said, investment memos can even include like cultural trend analysis. For example, like Lyra Health's approach was thinking about like how do their approach aligns with workplace mental health, the segmentation movements. So that's just like one example. But like overall, like the location shift, I think is also really real. As you know, with COVID, we just don't do like conference room meetings. People have taken pitch meetings. I feel like you've seen this guy who's gone viral. There's like this high schooler. Well, now he's not a high schooler anymore, but he used to take pitch deck meetings in his high school bathroom. That went viral. Now a lot of other people are doing that same concept. I just saw a guy like in Europe using the same thing and going viral with it. But it could be like, you know, taking meetings in different locations, even in co-working spaces, even like, you know, coffee bars. So like the environment is just like completely different. And I like to say, in terms of communication, like visual first communication is definitely essential. As you know, 85% of us prefer video content over text-based materials. As you know, with here, I'm sharing with you a slide since I know some people like to see the data and metrics and stuff. So Maven Clinic, which is a well-known health company, created pitch videos showing actual patient testimonials and user experiences. So that's just like one example. And going back to social proof, integration is like important everywhere. So pitch decks can include, you know, of course, influencer partnerships, user-generated content examples, and social media analysis and stuff like that. So this is just like the metrics have really like evolved, and I like to say traditional healthcare pitchers that just focus on regulatory pathways and reimbursement models is really different. And you're even seeing a shift in the focus of founders that are very, you know, so they're pretty much very public, can be more public facing, or you could call it like influence portfolios, where a founder's social media following is treated as like a big asset class. So example is like Flow Health's founder is very big, and they build a massive following discussing like reproductive health, which really directly translates to user acquisition and trust. So pretty much, you know, with communication channels, we prefer text, DM over email, and even phone calls. I know I don't really answer phone calls too much. I think it's like spam. On most of the time I do. It's crazy.
Yeah.
Like even personal experience, all these top founders, Gen Z founders, usually they give me their phone number and they're like, oh, Natalie, just like text me or something like that. So the email sometimes has gone away with like a lot of people. And that's just like one example, but overall feedback loop, of course, is faster due to the AI. We research everything independently before going to meetings. And of course, firms are adapting by like providing detailed background materials upfront and expecting more informed questions during pitches. So overall, just like the partnership approach isn't changing. Instead of just writing checks, VCs are offering to connect, you know, healthcare startups with, you know, influencers, even focusing on the creator economy, platforms helping with social media strategy. As you know, distribution is key now, and you're seeing a lot of companies adopt like that media first model too.
Wow, that's really interesting. There are a couple things that I'm thinking about that we didn't see as founders or as investors, and this is TikTok. These are these very short. Everybody knows what TikTok is for the most part, but we didn't have that as a go-to. Now you can basically look at a founder's work in a very short format and pretty much understand it, and things are built that way. In a way, I feel as though the minds of all people now have been trained to take information in this way. I don't think that it's something that's inherent to us. I think it is something that we have been trained to do with YouTube Shorts and things like that. I've even heard that YouTube Shorts have outstripped every other platform now with their shorts. So those who weren't on TikTok, who were of the older generation, who jumped onto social media through YouTube, they're now doing the shorts too. But I'm also very curious about pitching and how Gen Zers see pitching. Because if this is the case, that things need to be fast, in terms of the normal pitch, which some can say are between 7 and 10 minutes long, do you feel that those are too long for Gen Zers at this point?
Yeah, I like to say every company is different, but like you see, typically, like I know when I was doing pitches, typically it was like me, the analyst, and the associate would be like in the meeting. That was like the first round. After doing the due diligence, actually accepting the once it was accepted, you have a meeting with the founder, and usually it's with like analyst and associate, and of course associates still are usually typically still older. I like to say usually millennials still. So I like to say the time frame is still like relatively like the same, and it really is different per firm. Like I think each firm is like a little bit different on that, but yeah, pretty much I'd like to say that's relatively still the same, because it's not just like the Gen Z, it's just reviewing. It's usually a team, like other people are reviewing the pitch, and then of course when you get further on, it can include one of the partners and stuff. So usually those are people usually even older than millennials too. So I like to say that's like still the same.
I like hearing that, because especially in healthcare, we have due diligence that spans reading papers, scientific papers, understanding the mechanisms behind a particular pharmaceutical or medical device, etc. So it does require a bit more attention span. I would say a lot more attention span than some other verticals within venture capital. And I'm really excited to see Gen Z come into healthcare and partner and do diligence with us. So I'm happy that even though that is a certain training that I think we've all been getting, that it's not the end all be all, and that Gen Z can come into the fold and really dig their heels in to due diligence. Because without due diligence in healthcare, there really is nothing that can move forward, right?
Yeah. And I think you just see AI. Don't have tools that I can think of on the top of my head, but I like to say AI is making also faster to do due diligence too. Of course, I'd like to say that isn't the final check mark. Of course, it can go through different AI systems, and then of course the analysts or associates able to further analyze it, but can help to really break apart whether it's a research paper or, like you were saying, that's being researched, and to make it easier for them to understand too, because sometimes it's a lot to read, and there's a lot of companies that you have to review their pitches and all their details and scientific data. So that's why I think AI comes in, just to make you, I say, a 10x better analyst or 10x better associate. So it's really, I like to say, as a best friend to help you, assist you to be better.
I love that you brought AI into this, because it's the kind of thing where if you are not using it, you're losing out. There's so much to gain from it. And being able to parse information correctly with the right inputs in AI will help in the due diligence process. That's 100% true. And with that in mind, I'd like to ask you another question. And this is about the ROI benchmark expectations that Generation Z-led investments are looking at as compared to the traditional investment ROI.
Yeah, so I like to say, like, in terms of ROI, let me switch the other screen. Like, there's a lot of different like approaches, like kind of on this, but overall, you're seeing like, yeah, the blended returns, as you know, Gen Z is really focused on social impact. So they may be willing to accept, of course, a little bit lower returns. In terms of that, I like to say that's more on the Gen Z side, but usually when you move up to the partners and stuff, as I said, like usually Gen Z, we're still not the ones leading the firm. We're not like the partners' decisions. Usually we're still in the analyst associate rooms. But our timeline advantage, I like to say, is really huge as we're planning for like 40 plus year careers, which really allows for patient capital across like all sectors, and really defining like the definition of returns can be a little bit different. And I like to say, yeah, it's actually surprising. Yeah, Gen Z investors are willing to accept a lower financial returns for higher social capital. It's more like a trade-off. And in health specifically, the ROI math is like really like compelling. For like every dollar spent on preventative health, like saves $7 in treatment costs. So you see that like in modern health, which shows like 4 out of 1 ROI through reduced employee absenteeism and healthcare costs. So we're really like investing in these efficiency gains while traditional investors are still stuck in funding like kind of that sick care type of models. And of course, there's in terms of traditional firms, 10x returns are still expected, but our timeline flexibility allows for different like times of growth trajectory. And Lyra Health, they took time to grow and build out their clinical credibility, but now they serve millions of employees globally. So it's really focusing like on that long-term return. As you can see that in venture capital, like returns are going to be usually take a lot longer than they typically did, like even in the past. And they really exit opportunities really just have expanded beyond traditional healthcare focus, as focusing on Amazon's healthcare initiatives. So there's Meta's social health tools to Google's wellness platform expansion to using tools like Modern Health that could integrate with Google's workplace wellness initiative. So there's a lot of different exit opportunities, I like to say, for companies. As you know, M&A and IPO, like there's not as many IPOs recently. M&A has slightly increased besides the past couple months, but it's still like relatively slow. And I like to say, yeah, it's like a lot different. So like really depends. So yeah, like while traditional investors focus on like healthcare cost reduction, we're really investing in like healthcare experience improvement. So that's kind of like what we're like kind of a little bit more focused on, as using Lyra Health and Modern Health as some examples. But we aren't just focusing on like feel good investments, making sure they're financially sound bets on the future of healthcare. So it's a little bit different than traditional.
So just thinking about this as like personally, would you be more interested in having your portfolio be steeped completely in a 401k, or would you be more interested in having a mixture of capital markets within that? So not just your 401k, but then also some venture, which has proven over the years to be the most lucrative of all of the investment asset classes. So just trying to think about how Gen Zers see the capital markets and asset class. I would like to, pose that question to you.
Yeah, so definitely it's more the diversification instead of just 401k. As you know, like Gen Z, we're going to be living longer than before, our previous generations too. So going again, like why it's like the 40-year plus, but that's kind of like what we're seeing, like in terms of like ROI would definitely be having more of the diversification of different capital markets.
Ooh, I didn't know that Gen Z was going to live longer. That's so interesting.
Yeah,
I'll have
yeah,
to look that up. I'll have
yeah.
to look that up because unfortunately, what has seems the trend has been that
Mhm.
each generation has lived shorter lives than their predecessors.
Oh,
Um,
really?
that's been happening. Yeah, that's what's been happening. So that's something to look forward to if our life expectancy is on the rise, and that would be wonderful. Um, so let me take another question that is on my mind to ask you. So, what challenges do you see that venture capitalists face when we engage with Generation Z investors?
Yeah. So, I mean, in challenges that we kind of do has to have this other image is like we're not as easy to work with too. Like if you're used to
I love
traditional
that image, by the way,
relationships.
Natalie. It's
Yeah,
no
so we could
differences.
be, yeah, like I think that we can be like impatient, we can be skeptical, and we can question everything. So I think communication, as like the other questions, is like the biggest friction point. As yeah, like most of us prefer text, as shown in this picture, DM over email and phone calls. I know like even I was taught email etiquette at the firm that I was at, like how when we got an email from anyone in the firm, whether it was a partner or associate, or even it was one of those big emails where it's like everyone's together, we all had to respond that we received it. So that's why, like with anything we got, we had it was like all these emails because everyone's saying, yes, I read it or I confirm. Like that was etiquette like I didn't know about. But like for me, like I would be like, oh, like that wouldn't be a necessary thing for me now because it just ends up like bogging down. I think the inbox, because there's just so many different emails you're getting from different people. But um, I like to say just like in terms of yeah challenges is like information consumption creates different challenges. Like we're getting health information. This is a big issue from like TikTok, from Instagram, from LinkedIn, getting investment insights from X threads, market data from Discord servers. And like the time we meet with VCs, we often know even more about current trends than they do. That could like even like happen. And trust building takes, I like to say, 3x longer with our generation, especially around like sensitive topics, like health and money. As we've seen too many, I think companies make promises that they like can't keep. And in health specifically, we're really dealing with always misinformation. With 70% of Gen Z pretty much encounters misinformation like pretty much like weekly on a constant basis because as I said, it's on their feed. I see it like always on the time. It sometimes helps though checking comments because sometimes you will see people be like, oh well, this is not true or this is false. But again, like if you're not very conscious of that, like that's always like a challenge. And like we always question legacy processes. As I said, I was questioning the process of like always responding back to every email. Like why does like healthcare due diligence take 6 months, when we can evaluate a company's user experience like in 6 hours by just talking to actual patients. So like why are clinical trials still designed for like the 20th century patient engagement when companies like Spring Health, they can show like real-time mental health outcomes through their platforms. So I think those always like those different processes is like things that we could like question within like any firm that like we're working with. And our research independence also can frustrate traditional VCs as we don't wait for investment memos and stuff like that. So it's really talking directly to users. We usually do that like whether it's through like chats or like IRL events. As you know, I'm big on IRL events. You can talk with people, like it's a lot easier and stuff like that. And like going back into relationship building, like we said, it's 3x more time to build relationships with us, but also relationship building isn't following traditional patterns. Like, we don't go to like the golf meetings or the fancy dinners like as much as before. I haven't I haven't I was taught to play golf like as a child, but I have yet to actually ever use that for any business discussion. To go to golf. I only see one recent event that was even for golf. It was for like accountants. I think like to say that's like a lot different than before. And I think the impatience with like healthcare really works. We just always challenge like assumptions that previous generations made in terms of like why healthcare therapy can't be accessible as like another company has made it and stuff like that. And like why can't health data be owned by patients instead of systems and stuff like that. So I like to say the feedback loop is like immediate and like public. If we have a bad experience with things, I'm not saying this is always a good thing, but like with a VC, we're usually posting about it on social media. You see that on X or even in private. This could be more in private communities and channels, like or investor group chats. Word for it spreads really fast in our networks, and just that's something always like to keep in mind to not have a bad rep. With Gen Z, we can just like vocal advocates of like what we're feeling. And like overall, like the biggest challenges that we really expect VCs to understand like our generation's health experiences too. And yeah, we're just both more diverse than the previous investor generation. So you see there's more women investors, more people from different ethnic groups breaking into venture capital that was mainly gift kept and it wasn't very diverse as like before. So just like to say those are like just some examples.
Oh, that's fantastic. A lot to think about. And it made me think about echo chambers.
Mhm.
So how do you as a Gen Zer avoid being caught in an echo chamber, right? Because sometimes we like to be surrounded by people who are saying the same things that we are saying, whether they're correct or not. So how do you protect yourself in this investment climate from that?
Yeah, well, I like to say it helps just not being in your bubble. So as I think attending, as I said, events, I think are always great. Whether it's in your industry, whether you're focusing on healthcare or other sector, to be surrounded by people, different perspectives, going to mixers, to panels where experts are expressing their opinion. Like for example, I know you were on a panel, it was like mastering, it was something in healthcare for female founders and VC.
Oh, it's Creme de la Creme. Yes.
Yeah. So that was example in
me.
hearing your perspective as an investor, but also the founder's perspective in terms of like healthcare and like how their data is being like managed and how hospitals should be creating their own internal systems and stuff like that. So I like to say that's like just like one example.
Okay, because I can see how it can be a danger when investing, because we need to hear a lot of we need to hear the truth, not necessarily. It doesn't necessarily have to be completely diverse if it is not the truth. If the truth is usually just a few things, and there are a lot of ways to be wrong, right? Oftentimes, rather than to be right. So I think that's one thing within healthcare investing that we try and navigate. So I would say that we have this new modern information age with AI. So it's quite different from when we were just using Google, right? And so rather than being in an echo chamber, like you did touch on having all this information. So how do you parse that information as a Gen Zer? It's quite intense.
Yeah, I mean, information, a lot of times you are able to fact check it. I use like a lot of different tools like Claude AI. Claude is a great resource I use a lot. I also use like Gemini. I pay for both of those. So I use the paid version of Claude, paid version of Gemini. And Gemini has great research ability to do like deep research on that platform. So I like today that's like a great like resource to use. I do know how to do the old ways. Of fact checking and stuff, going back to papers and resources. But I like to say AI is great because, especially with Gemini, because it usually links back to the source. So you can like
Yeah.
find the source. Oh, it quoted this statistic or whatever. Let me use that
Mhm.
link, and then you can actually see like if it's a credible source or not. Whether it's linking back to a journal article or a research paper or something. So like I like to say those are like just like some like examples, but yeah, like as a piece together information is like also helps who is it coming from, but
Mm.
to like the influencers or the thought leaders that you're following on the internet too. I think LinkedIn, that's why LinkedIn I think is really helpful, because you can
Mhm.
follow thought leaders in the healthcare space,
Yeah.
and these are people that are already investors, they're partners
Mhm.
and firms. So they have people fact checking what they're saying on the internet, because they're LPs, like they have all this pressure on them. So those are great people to follow to hear their thoughts and insights into what the future of healthcare is, and what sources they're using, what things are they reading, and going into the owning your own data part. Like newsletters are great to follow from these experts, like actually known experts that you can vet
Mm.
on LinkedIn and stuff like that to based on their background. So like to say there's like different ways to kind of like vet and um, segment like the data that you're consuming. And yeah, because some things are just for pleasure, and then some things are like, oh, this is for actually the company I'm working for. Yeah.
Yeah. Um, and you did talk about some of the technology platforms that are making it easier for Gen Z. That was one of the questions I was going to ask you. And you mentioned some AI platforms. Are there any other platforms that are interesting to you that help you to participate in venture investments, whether as an angel, whether as an
Mm.
LP for a particular venture firm, etc.?
Yeah, I mean, a lot of different tools that like can be used. I mean, there's things like fractional investing platforms. I know Republic is like one too. Like they kind of use I know they can back different companies. They're kind of different than the traditional like VC concentration on um on 3 to 5. So yeah, that's like just like one example. There's a lot of different crowdfunding platforms that people use. I think there's a Rising one. I'm trying to remember the name of one recently I came across in Web3. I was like, I know they're running like this. I'll have to like look to see like what's their name. I don't remember, but yeah, there's like a lot of different platforms that people are using, whether it's like blockchain or Web3, or yeah. So I think it's pretty broad, like the tools that we use. It really depends, like I say, like on the sector too. But like if you have any like um specific like platforms, like depending on what, let me know, like specifically, like, oh, like in healthcare. I don't really like know too much like in healthcare, but and broader in like consumer, some like different platforms people use. I know I'm more focused on different AI tools.
Mm.
Like as I mentioned, it was Claude and Gemini are the main ones. Things for creating presentations like this is like Gamma. So, creating different pitch decks. Gamma is a great resource to use to create AI powered presentations really, really quickly, just using a couple of words. So I think, yeah, like it really depends like on the sector. Yeah.
Hmm. Okay. It's interesting. you can invest in healthcare startups using some of the same platforms that you're using for tracking your workouts, your meditation. There's some things that are very
Yeah.
inclusive and that I would love you to speak about. Maybe also, fractional investing,
Mm.
maybe an angel investing as well as a collective, because there's a lot of power in being collective investors, right?
Mhm.
And as a movement, as if Gen Zers are forming a collective angel investment platform, let's say, that caters to healthcare and healthcare innovation, that really speaks to their own values. And I won't say that Gen Z is a monolith. Of course, there are very many different personalities and types of people in any generation. But then there are some communities within Gen Z who can really find synchronicity. And
Mhm.
so I look forward to seeing these kinds of groups getting together early on in Gen Z's
Mhm.
rise to really start investing and
Yeah.
seeing great returns. Because, for instance, if early on somebody invested in Uber, like maybe $1,000, they could
Yeah.
walk away with over $10 million during IPO. Like, it was that impressive. So for Gen Zers to be able to hop on that as a collective group will be really interesting. And it will also create the kind of wealth that perpetuates more founders and a greater resilience and also more innovation. So I'm very excited about that. So,
Yeah.
Natalie, we're coming to the end of this
Mhm.
conversation, and it has been fantastic. Are there any thoughts that you would like to leave uh,
Mhm.
the viewers with before we go?
Yeah, I just remember the name of the app is called Believe. So they're
Mm-hmm.
new. They're backed by some really big people, but they're focused on finding your first believer. So it's more like the coin. You can launch your own meme coin on their platform. So that's just like one example of a different type of like investment. It's called the Believe app, and yeah,
Mm.
like that's just like one like example. So having the people that are your followers, your audience, going back to wise helps for being a founder with the audience. You can have people actually back you through like meme coins. So that's just like one example going into the blockchain and the Web3 kind of phase. But yeah,
Mm.
that was like last word I wanted to state. But yeah, overall, yeah, as you can see, I'm on Natalie Neptune. Feel free to follow me, yeah, on LinkedIn or the Beehive that's like in the comments. But yeah.
Natalie, thank you so much for joining us. This has been so interesting. I've learned so much about what Gen Z is looking for. And I'm looking forward to joining you in these multi generational IRL events that you host. Do you have any events coming up soon?
Yeah, I mean, don't have any focus on healthcare, but I mean, we of course doing an intern event at Pace next week. We're actually doing a female empowerment panel talking about like kind of wealth management coming up in August. We are doing some events for New York Climate Week that's coming up in September. So a pre-climate week mixer. We're and a mental health actually focused event too. But yeah, I just say it helps to just follow on LinkedIn, and then through my newsletter you can get access to the events that I will be releasing on there.
Thank you once again. And we look forward to being at some of your events in the near future. And anybody who would like to reach out to Natalie, they can see that we have her information in the comments. So please reach out to us at Purelite Ventures or to Natalie or to both, all of us. We'd love to hear from you. We'd love to share more about venture capital and how healthcare is an integral part of that. Bye, everybody. And thank you, Natalie.